To manage the integrity of a transaction, we need, number one, secure and unique account address. We need a standard approach to uniquely identify the participants in the decentralized network. Number two, authorization of the transaction by the sender through digital signing. And number three, verification that the content of the transaction is not modified. We use a combination of hashing and public key cryptography that we learned in the last two lessons to solve these problems. Let's start with the address of the accounts. Addresses of accounts are generated using public key private key pair. Step 1. A 256-bit random number is generated and designated as the private key, kept secure and locked using a passphrase. Step 2. An ECC algorithm is applied to the private key to get a unique public key. This is the private public key pair. Step 3. Then a hashing function is applied to the public key to obtain the account address. The address is shorter in size, only 20 bytes or 160 bits. Now that we have the account address, let's look at the transaction initiated by this address. A transaction for transferring assets will have to be authorized, it has to be non-repudiable, and unmodifiable. We'll first examine the digital signing process and then apply it to the transaction. Data is hashed and encrypted. This is the digital signature. The receiver gets the original data and the secure hash digitally signed. Receiver can recompute the hash of the original data received and compare it with the received hash to verify the integrity of the document. Now consider the transaction to be that data. Step number 1, find the hash of the data fields of the transaction. Step number 2, encrypt that hash using the private key of the participant originating the transaction, thus digitally signing the transaction to authorize and making the transaction non-repudiable. Step number 3, this hash is added to the transaction. It can be verified by others decrypting it using the public key of the sender of the transaction and recomputing the hash of the transaction. Then compare the computed hash and the hash received as the digital signature. If there is a match, accept the transaction. Otherwise, reject it. Note that for a complete transaction verification, the timestamp, nonce, account balances, and sufficiency of fees are also verified.